You're watching Beyond Markets. Welcome, I'm Esther Awuni. Many thanks for joining us today. On today's show, we'll analyze the prospects of African countries. As always, you can join the conversation with the hashtag Beyond Markets. You can send your thoughts, your comments to my Twitter handle too. It's at Esther O. Awuni. Now, the latest Africa Prospect Indicator ranking published by Nielsen shows that prospects of Africa's markets are stabilizing despite relentless change. Ailsa Wingfield, Executive Director, Intelligence Global Markets at Nielsen, joins me to discuss prospects of African countries. Ailsa, thank you for taking the time out to join us today. But it's quite interesting that, the report states that these prospects are actually improving. And I'd like you to just reconcile that with the fact that GDP growth for sub-Saharan Africa forecast has actually been downgraded to somewhere around 2.8% from 3.3%. So how do we marry this not too bright forecast with these improving prospects that you see?
So what we are seeing is that one of the indicators that we have a look at in the overall Africa Prospects Indicator is related to economic indicators. And certainly we all know that economic indicators, particularly things like GDP growth, are more sluggish and have been downgraded in recent times. And that's one of the indicators that we see making up the overall Africa Prospects Indicators. But there are another three indicators. The next one is around how businesses view their growth potential on the continent. So in that area, we're certainly seeing an improvement around how businesses view their own opportunities to grow. The third area is around the consumer prospects. And similarly in this instance as well, there are certainly a lot of disparate spending intentions and a lot of purchasing pressure that might differ across different countries. We are seeing improvements in pockets and areas of countries across the country. And then in the fourth area of this, which goes into making up the overall Africa Prospects Indicator, on the retail side, we're now seeing from a retailer's perspective consecutive periods of improved outlook around consumer spending in stores. So based on the four indicators, we're starting to see the prospects stabilize over time and are not only related to some of those economic prospects, albeit that even within the economic area of the prospects, we do still see some really good prospects out there. The likes of Ghana, the likes of Ethiopia, Cote d'Ivoire, they do outstrip some of the global countries in terms of growth opportunities. Although we do know that areas like Nigeria, South Africa and Angola are one of or some of the three biggest markets which are contributing to the more sluggish outlook on the economic horizon.
Now we're going to take the country performance, take a look at those countries, the top five, starting with Kenya in just a bit. But I just want to also draw your attention to another part of the report, which says that business growth will need to be boosted in non-commodity dependent countries, which you say provide more nuggets of opportunity. So could you just shed more insight on that? And where does that leave the other countries that are not commodity dependent?
So certainly what we are seeing, if all your bets are in one or two countries, and those countries happen to be ones which have faced greater turmoil from an economic perspective, your prospects for growth in those markets are going to be a little bit constrained. And what we are now seeing is that business recognize some of the more diversified, if not smaller economies, where there are opportunities that exist as well. And these markets in particular then offer opportunities to bolster, I think, an overall growth for sub-Saharan Africa, in addition to the large and important economies which have faced more pressure.
Okay, let's go to country performance, what the report terms strength in stability. Starting with Kenya. Kenya taking the lead on this report, saying it's characterized by strong economic and consumer prospects. However, its business and retail prospects have deteriorated and GDP rates are lower, with the economy losing steam in the first quarter of this year. Could you just talk to us about the rationale behind this and the business case that you make for Kenya?
So what we see is that in terms of the overall Africa Prospects Indicator that we calculate, there's been a bit of a tussle for that top position for the last 3 to 4 years between Kenya and Cote d'Ivoire in terms of that position. We've seen Kenya for the last 2 to 3 quarters now holding in there as Africa's top prospect across those 4 indicators. But certainly when we look at the dynamics within that, we know Kenya still holds some of the biggest economic prospects in terms of their economic potential, although, like we say, it has been a little bit slower going into the start of this year, but is expected to improve. But what we do know, what also offsets that, is some of the indicators in the retail space and on the business horizon. So Kenya, rated by businesses, is still well up there as one of the best prospects in terms of businesses being able to achieve growth. But again, for them, or to enable them to be able to do that, it's about understanding the consumers in these markets. We've seen consumer confidence in Kenya on the rise, so certainly Kenyans' views and sentiment around things like their job prospects, around their financial security, and whether it's a good time to buy the products and services that they need, is on the increase. One of the areas that they've struggled a little bit in is on the retail side, but we are starting to see that turn around a little bit now as well and rank more highly in terms of those prospects. So on a collective basis, Kenya still rates highly on that indicator and still maintains the #1 position on the Nielsen Africa Prospects indicator.
Well, businesses in Kenya, are they bullish, especially for the medium to long term, that these indicators will remain the same, that consumers will continue to spend at a rate that, of course, profits, that shows a strong discretionary income? Are they bullish on the long term?
So we definitely see that businesses in Kenya rate their own prospects ahead of the country's prospects. So we ask businesses about how they see two indicators on this front. One is how they look at the overall country's growth potential. And that usually aligns fairly closely with the economic conditions in the country. And then the second indicator, which for us is probably more important from a business perspective, is how they view their own ability to grow. And this gives us insight into, do they believe they have the right products in market? Are they reaching the right consumers? Are they marketing and media efforts aligned and resonating with what consumers need? Are they able to truly tap into what generates consumer demand? And on this front, corporates in Kenya are feeling bullish about that. They rate their growth prospects as good in Kenya, which is ahead of maybe where we've seen a bit of a slowing off in economic steam. From a business perspective, we certainly do see that businesses do rate their opportunities highly in those markets. But it all comes back down to making sure you've got the right products, the right price points, the right portfolio of products. And I think what's integrally linked with that is, are you managing that in the retail space? With significant growth in modern trade in Kenya, new retailers on the ground, it's dealing with shoppers who are now shopping and migrating to modern trade formats. But as well as that, is managing the circumstances of what consumers want in informal trade. We know that it's been quite tough for informal traders, and I think this is one of the areas that has maybe pulled the overall rating for Kenya back a little bit, is there's been some difficulties in the informal retail space around the extension of credit to retailers, which should start improving to make that ease of doing business from a retailer's perspective a little bit easier, and therefore help consumers to purchase and find the products that they need in the retail areas.
I'm not sure. I don't know if this is something, a metric, an indicator you also check, but how would you describe for these companies who want to be a step ahead of the consumer in terms of knowing what the consumers want and just being able to properly analyze and break down changing consumer habits? How would you rate the level of innovation in terms of the kind of products that they think that the consumers would need either now or in the immediate future?
So definitely, I think one of the most important things is we speak to businesses around their business priorities as well. And what we've seen over time is that a lot of the more tactical retail indicators, such as route to market, distribution, supply chain, optimal stock supplies, rated as their #1 business priorities. What we've seen changing, and more so into the last year or so, in terms of how we look at what businesses prioritize for success and to grow, have been all around more of the consumer elements coming to the fore. So understanding consumer demand, understanding innovation, understanding marketing and media, which is all very much around businesses in the consumer space, gaining a better understanding of consumers to make sure that they're bringing the right products and not necessarily just cheaper products to consumers across any country in Africa. So what we started to unpack now a little bit more is in this area of consumer demand. And there are certainly, there are always big signals and drivers of change which point to some of those indicators, things like changing demographics, urbanization, people's lifestyles and work-life balance, which inform that, but also a lot of consumer trends which inform that. The importance of a brand's purpose, or trends in health and wellness or sustainability, or making sure that your brand's value equation is meeting the needs of consumers in different markets. So certainly in the whole area of understanding consumer, that has become increasingly important. To understand more about consumers and not merely to just bring products that might have worked in other markets, whether those are other markets in Africa or other emerging markets from further afield. It's very, very much become around understanding the fundamentals around consumers, understanding their lifestyles, their circumstances, how they shop, how they live, to make sure that we are developing products, bringing products, pricing those products, and delivering the right kind of innovation to keep growth in the area of consumer demand moving forward based on some of the bigger, broader trends, as well as understanding consumers in the markets and what they need.
Okay, let's quickly move on to Cote d'Ivoire, ranking second on the API, but the report also states that only 17% of Ivorian retailers feel that consumer spending is increasing, and just 15% think that consumers are increasingly willing to try new products. I mean, that's a bit of a setback, and not a strong area for these companies. What are your thoughts?
So again, Cote d'Ivoire has always been up there as one of the, a great opportunity. It's got favorable economic indicators, it's got favorable business indicators, but certainly the biggest challenge, or I'd say source of potential in Cote d'Ivoire to drive those growth opportunities forward is in the consumer area. So whilst Cote d'Ivoire ranks second overall, from a consumer prospects point of view, it's further down that list in 7th, 8th place. And some of the reasons for this that we try to unpack is that we've had a look at, for example, a common basket of goods, and Ivorian consumers pay 33% more for the same basket of goods than what Nigerians, for example, in West Africa pay. We also know that only 15% of Ivorians are willing to try new products versus 45% of Nigerians. And this is despite the fact that Ivorians have a GDP per capita of roughly 1.6 times higher than a Nigerian. And I think what we're seeing in this example in particular, when we have a look at the comparisons between what consumers are faced with on a day-to-day basis, it means that, strategies for products, and potentially the exact same product in one country versus the next country, will need to differ dramatically. What we also see is, and I think what we might assume in an instance like this, is that Ivorians are looking for more cheaper products because of what they've faced with in the products that are available to them. But in fact, that's not the case. What we've seen is that Ivorians actually purchase, and the number one and the primary drivers for how they choose products are related to factors such as trust and familiarity, and they're not based on price. So again, I think there's opportunities in this for those well-established brands already in Cote d'Ivoire. It means that brands which are already trusted there offer good opportunities to perhaps extend their ranges into other categories where brands, because they come from a position of trust already. And that halo effect of brands with equity, brands which are well established, are ones which hold some of that gravitas in the market, and are aware for consumers in the market. But on the counter side of that, for new brands looking at at Cote d'Ivoire as a market to establish themselves, I think they're going to have to be working a whole lot harder. When they come in as new unknown brands, they're going to have to invest quite a bit more in establishing themselves in those markets, in building awareness amongst consumers, and also establish that relationship of trust in terms of the brand qualities, the brand attributes, and the purpose that the brand stands for, to entice consumers to perhaps switch between brands and products in Cote d'Ivoire.
Yeah, absolutely. Interesting stuff. Ailsa, we're going to have to just take a quick break at this point. We'll come back and just go through the rest of the countries on that list. I've been speaking to Ailsa Wingfield. She's Executive Director, Intelligence Global Markets at Nielsen. We'll continue our conversation when we come back. To join us again. If you're just joining us, Ailsa Wingfield, Executive Director, Intelligence Global Markets at Nielsen, is with me today, and we're discussing the prospects of African countries. Ailsa, thank you for your time so far. Let's quickly pick up from where we left off, starting or continuing with Ghana, which takes a fourth position. This is a country that has obviously gotten some help from the International Monetary Fund, and is also termed as one of the fastest growing economies in the world. The companies share these positive outlook, but share your perspective with us in terms of how consumers are feeling in Ghana, what these countries are doing in terms of innovation, and how they are forecasting how consumers are going to continue to spend or not.
So definitely, I think Ghana is one of those standout ones, and a great story in terms of the optimism and the turnaround that we've seen at that market. We've seen overall consumer confidence on the increase. We see consumer sentiment certainly on the improvement. We see businesses acknowledging the opportunities that exist in Ghana and willing to place their bets on investing and developing and expanding into the market. Again, what we're seeing is that consumer spending in store on a range of categories is on the increase. What we also have a look at in some of these indicators is, again, not only the cheaper value alternatives necessarily, but markets in this kind of environment also provide opportunities for new product innovation, particularly products which might offer some more premium attributes and deliver better quality. So in these kinds of climates where there are these levels of optimism literally across the spectrum, from an economic point of view, from a business point of view, and equally in terms of how consumers are feeling, that they all line up to really support the opportunities that do exist. And certainly in these kinds of climates, it means consumers are more open to trying more products. We also know that particularly in many countries across Africa, where choice of products might previously have been quite limited, as new products are now brought to market, consumers are open to that. And when they're feeling a little bit more comfortable about the money in their pockets, they're open to experimenting on those kinds of products. But again, the caution is it's not just about a new, cheaper alternative. It's certainly about new products which offer the elements of value, of purpose, which speak to consumers' lifestyle and ideals in terms of what they're looking for. Those might be products of a more aspirational nature, or even products of a more inspirational nature in terms of providing some more of those intangible attributes about how they're supporting the environment, what good they're doing in their communities, and also how they speak to consumers' needs for a healthier lifestyle. So in all of these kinds of instances and in this environment, it opens up more of those opportunities when consumers are feeling a little bit more confident and are willing to spend a little bit more on consumer packaged goods. We also know that when consumers are feeling a little bit more confident, they start adding back in some more of the discretionary items. So it's not merely about the grocery items and the food items when they've got a little bit more money in the pocket, which is again equally good opportunities then in some of the discretionary areas. So those might be more of the treats and luxuries in terms of products, but it's also usually things that relate to clothing and fashion. It relates to out-of-home entertainment and out-of-home eating. So it provides those opportunities then across the spectrum and beyond just a consumer packaged good basket of items.
Okay, let's quickly round up with Nigeria. It retains its fifth position again, and it would seem that businesses are just hoping, counting on the economic recovery and hoping that, the economic recovery will gain more momentum. I mean, what are your thoughts on that? And secondly, I mean, would you say that, for a market like this, consumers are confident about the strength of the economy?
So they are. Again, I mean, Nigeria's been on a bit of a roller coaster ride in the 5 years since we've been tracking this. Nigeria, the first time we published the Nielsen Africa Prospects Indicator, Nigeria was in lead position. That's going back 5 years ago. It had slipped to as low as 8th position, but what we've definitely seen in the last year or so, it has risen in the ranks post commodity price crisis, post some of the global financial economic crisis, and there's certainly more stability that is coming through in Nigeria in terms of those prospects. What Nigeria has certainly working in its favor is certainly the focus by businesses. To succeed in Africa, we need to succeed in Nigeria as being one of those big global markets. So certainly holds great promise. We had seen businesses slipping in terms of how they viewed their prospects in Nigeria. But I think what we've seen is a growing realization to succeed on the continent, we have to succeed in Nigeria despite some of the tougher economic cycles that we've been through. It's also meant that companies have needed to think and come up with new, efficient, innovative ways of tapping into that potential. And we've seen that. So we've seen a lot of new, smaller manufacturers coming to the fore who've perhaps been a little bit more agile during some of these tougher times of meeting consumers' needs. What we're also seeing is that these new, smaller manufacturers are outstripping the growth of some of the bigger, well-known multinational players by nearly 3 to 1. So we definitely see that this has opened up scope for many players in Nigeria. From a consumer perspective as well, Nigeria ranks 1 in terms of consumer prospects, which is outstanding in terms of seeing the potential from a consumer's perspective. As we know, they still face some of the highest inflation on the continent. They face, for example, again, versus places like Cote d'Ivoire, which we mentioned earlier, lower wages by comparison, but they are the most outgoing and adventurous in terms of trying new products. And I think this provides masses of opportunities for new players in Nigeria. It also shows that not only the brands with the heritage and equity are the ones that will succeed, but certainly the ones that speak to consumers' needs for new products, exciting products. We know that consumers are expanding their repertoires, they're putting more items into their baskets. So it just means that the notion of loyalty in Nigeria has been turned on its head a little bit. And we're probably likely to see more disloyalty from a consumer's perspective, and like we say, more openness to buying these new products, which is an extremely positive environment for anybody looking to invest in Nigeria. And bringing new products to consumers. But again, I think, consumers are discerning. They want products that speak to their direct needs, whether that's their circumstances, the fact that they may be commuting for hours a day and need products to make their lives easier and simpler in that regard, or the fact that there is still massive youth population across Nigeria. There's many areas in which businesses can identify what those drivers of future consumer demand and innovation will be. But we certainly see that value is going to be one of them, convenience is going to be one of them, and identifying your brand's purpose is going to be another of those.
Ailsa, we're going to have to leave it there. Thank you so much. A very robust report, and of course, good to see some positive shoots, especially in the consumer space. Thank you for your time today. I've been speaking to Ailsa Wingfield. She's Executive Director, Intelligence Global Markets at Nielsen. Well, that's it on Beyond Markets. Thank you so much for being a part of it. Remember, you can watch the show at 5 p.m. West African time daily and have access to all previous episodes of the show on our website. That's CNBCAfrica.com. You can also stay engaged with the hashtag Beyond Markets. And of course, you can follow my Twitter handle too. It's at Esther O. Awuni. From myself and the team, have a great day.